This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on September the 9th, 2011. Our time is 8:42 in the morning Mountain. That's 10:42 Eastern. Radio show runs on AM 640 in Toronto, 630 CHED in Edmonton. If you ever miss a radio show, would like to go back and listen to more, if you are obviously taken away from the radio for whatever reason, go to Harold's website, HESradio.com. HESradio.com. All the shows are archived there. And this is a special show because this weekend, on Sunday, will be the 10th anniversary of 9/11, a day that we all remember very well. I remember it as if it was yesterday, very, very vividly. It's like a movie in my mind. It's hard to believe that 10 years has gone by, and we remember all those that were affected by what happened on 9/11. The world is a very different place today. Those that have been invested in hard assets over the last 10 years have done very, very well, and those in the stock market have not done as well, to say the least. Harold, it was 10 years ago, approximately October of 2001, that you started doing the show. I joined you in February of 2002. You've been doing the show 10 years. What was it back then that you felt that hard assets, precious metals, gold, silver, diamonds would do well in that after 9/11 environment?
Well, you're right, Randy. Boy, oh boy, it is vividly in my mind, and it was possibly one of the worst days in history. So the world changed on that particular day, and it really hit home with me. And as a financial person, after I got through obviously being, so upset obviously about what we were seeing on television and what was going down, one of the biggest and most unbelievable times in history. I remember seeing it on television that day. And after I got through the shock of everything, it occurred to me that the world was going to change financially from that point on. And I thought at that point it was time to let my listeners know what was going on and what was the future was going to bring. And silver was at $4 at that point, and gold was at $250, and people were very confused as to what the world financial situations and what was going to happen politically around the world. And fortunately, we gave direction to what was going on financially, and it's worked out extremely well for our listeners and clients. So, again, you're right, Randy. It's a very solemn day. It's it's a time that we're all going to sit back and remember what we were doing on that particular day. But it did change the world, and it changed the United States. And in actual fact, it showed that one of the greatest superpowers in the world could be hurt, and that's what really changed the way that people looked at things within the United States. So, again, it was a terrible time in history. It changed the world as we know it. All you have to do is go to an airport, and you'll realize how much it has changed. But financially, it's changed the world, and fortunately, we were able to be correct as to what we felt was going to financially happen to the world, and our clients have been the beneficiaries of that. So, again, it's an unbelievable weekend, and I will remember exactly what I was doing during that particular time. All in all, the markets have done extremely well for us. This week was a very volatile week, and we've talked every week that the markets are going to remain very volatile. We'll never hit the prices that we anticipate hitting in gold and silver and other commodities without volatility. But this week you saw one day the market was up substantially, one day the market was down substantially, and it seems like it has no direction, but it definitely does have direction. This week was a unique week in the sense that countries are getting desperate. Just like when people get into financial situations, they'll do things out of desperation, and that's what I'm finding is happening right now in the marketplace. In actual fact, most people probably don't know this, but one day this week, I believe it was on Tuesday, that after the long weekend, that the gold market dropped almost $80 on the day. We talked about the gold market and silver market, starting to hit record numbers, and gold could go up $100 in a day or more, and silver could go up $1, $2, $3 in a day or more. And basically, we saw about an $80 downturn in the in the gold market earlier in the week, and that was primarily because of the Swiss franc. So basically, Switzerland opened a new round of global currency war as fading economic growth forces policymakers to step up efforts to spur expansion. So the Swiss National Bank decided to cap the franc's rate for the first time since 1978, and it marked a bid to hurt by the currency that last month strengthened to records against the euro and the dollar. But the franc plunged 8.1% in one day against the euro. So basically what you're starting to see at this point is intervention and manipulation. And that's exactly what the Swiss government is saying at this point. We will see a lot more intervention now. We will see manipulation on a grand scale, said Stuart Thomas, and he helps oversee a $120 billion portfolio. So basically what you're going to see is massive changes in currency. And countries are starting to panic because, again, the growth is non-existent in most countries, and again, because of greed and stupidity, most countries, obviously including the United States, have just made some horrendous moves. So basically, if you read the newsletter this week, you're going to get a good feeling as to how severe the situations are starting to get right now. They're saying that the world is dangerous, in a dangerous period as Europe turmoil adds to risk. World Bank President Robert Zoellick indicates that the risk of the global economy are intensifying, with Euro region outlook dependent on the European leaders making the right decisions. We're moving into a very dangerous period. Rabini is saying we are now in the worst situation since 2008. There's George Soros is coming out and saying that this crisis is worse than Lehman, and Lehman almost brought down the financial markets as we know them. Remember the collapse of Lehman Brothers. Europeans certainly do. As Europe struggles to contain its government debt crisis, the greatest fear is that one of the continent's major banks may fail, setting off a financial panic like the one sparked by Lehman bankruptcy in September 2008. China's central bankers warn of global economic risk increasing. So these are the situations that we really need to be concerned about because, again, desperate times bring on desperate measures, and we're starting to see those situations. Again, there are only very few markets that will react to the situations that we're going through. And my feeling as a very conservative person and somebody who's not taking risks at this particular time at all, and again, I know some people made a lot of money in the markets, taking the risk. We just don't do that. Right now, things are so frightening and so concerning and so risky that one bad move could put you in the poorhouse. That's why I'm saying at this particular point, part of your portfolio should be in hard assets, gold, silver, diamonds. Personally, I'm out of the stock market, have been for a long time because the risk is severe. A small investor really doesn't stand a chance in the stock and paper markets at this particular point, and you're really starting to see that. One day the stock market's up 300 points, the next day it's down 400 or 500. And again, it's just not the place to have our money at this particular point because, again, if we get a repeat of 2008 when the stock market, when the Dow in the U.S. dropped from 14,000 to 6,500, that wiped out most people. You had to wait for 3 years for the market to somewhat come back, and now we're in another situation where the market's getting ready to fall substantially again. October is a bad month for the stock market, but I think the major declines are going to come in the first quarter of next year as there's a lot of depression going on. People are just not happy. They don't have money. They can't pay their debts. Their investments are not doing well unless you're in gold and silver and diamonds. The fact is that if you're sitting in paper assets, I wouldn't even be sleeping at night. I'd be so concerned about what's going to happen with my money. You're much better off sitting in cash than being in stocks and paper assets right now. Because if we get another repeat of 2008, which I believe that we are going to see, because there's so many banks and financial institutions in trouble again, that again is just too risky. The game plan would be to own gold and silver, even though gold is sitting just under $1,900 and silver's trading at about 42, 43. I still think that there's tremendous upside potential. But again, it's not only about making money right now, it's about preserving your equity and your capital, and it's about putting yourself in a position to fight inflation. In my opinion, inflation is going to kill the financial markets. It's not going to be a mild inflationary situation. It's going to be a massive inflationary situation because, again, most countries are not paying attention to it because they have so many other problems at this time. So they're just putting it on the back burner. But the bottom line is that the price of commodities are rising so substantially, and the cost of living is going up so substantially at a time when most people are not working or making anywhere near as much money as they used to, that's a recipe for disaster. And basically, no matter what's going on, and there's probably 100 different situations at this point that warrants consideration as to dangerous situations in the market. But to keep things simple and to keep things in the right perspective, inflation is going to kill any type of recovery in the United States or anywhere else in the world. It's one of the worst situations to deal with, and the way that you deal with inflation, if you go back in history, is to raise interest rates, to strengthen your dollar, not to keep your dollar at zero and your interest rates at zero, so there's no chance of fighting inflation. And by the time the U.S. deals with inflation, because they've got so many other problems on the plate that to them are more important than inflation, it's going to be so out of hand that the interest rates, again, and that's why I've always said that interest rates are going to go back up to 20%. I know there's a lot of people out there that probably don't believe that that's going to happen, but it's happened before, and it's going to happen again. The fact is that when you have massive inflation like we are going to have, and we already have inflation, there's no doubt. Just look at the price of commodities, look at gas prices and food prices and everything else going on at a time when most people are not making anywhere near the money that they used to make. It's a very, very difficult time. We anticipate that gold and silver will be the two strongest commodities to deal in. We still believe that gold has a tremendous way to go. You know, we're going to break $2,000 more than likely this year in gold and probably end up the year at about $2,200. It's next year and the year after that market is really going to go ballistic because, again, we're going to see a lot of the situations that we've talked about really kick in going into the first quarter of next year. And that's where we could see gold go to $2,500, $2,800. In fact, because we're looking at situations that are so severe, there's no limit to what gold could go to. You may ask, who is going to buy gold at $3,000, $4,000, $5,000? These hedge funds have no fear. They understand what's going on, and again, it's only a price. And the fact is, gold could go to $5,000, gold could go to $10,000. There is no limit to how high that market can go. In fact, if you read the newsletter this week, there's predictions from very, very serious prognosticators that are saying that gold could literally go with inflation up to $8,000 or $10,000 an ounce. And again, I agree with those numbers. So we're nowhere close to the top. Every time the market does come down, it comes right back up because the fact is that these hedge funds and other investors are looking to take advantage of any type of dip in the market. The most important thing that we need to concentrate on are the fundamentals of the market. And the fundamentals are that the U.S. dollar will continue to fall. It's up for the last few days because of what I mentioned before with currency wars, but there's no way that the U.S. currency is a flight to quality. So there's no doubt in my mind that the U.S. dollar will continue to fall. In fact, it has to because the U.S. is not going to raise interest rates for 2 years. If the dollar keeps on falling, gold will keep on going up. Add to that the inflation implications of the market, and that will push gold to levels that nobody ever dreamed of before. So again, if you're not in the marketplace at this point, if you've listened to the show for 10 years, for 5 years, for 2 years, you've seen that these markets have done what they're supposed to do. Every market will do what it's supposed to do, even though they've been manipulated down 8 or 9 times in the 10 years that we've traded this market. Gold is still sitting at record levels and about to hit prices in the stratosphere. So again, we're in the most frightening, difficult times that we have ever been through. Most of us are not old enough to have gone through the Great Depression. I've studied it. I understand it. I understand that we're probably going to go into a very similar situation again. We're going to go into another recession again. So again, the smart thing to do at this point would be to, first of all, get out of your mutual funds and your stocks at this particular point. I'm not saying this because I have anything against stock brokers or stock analysts or anything. It's just not the right market to be at this point. And again, I'm not going to recommend going short in a market. It's just too risky. So I'm saying at this point that if you just sit on the sidelines, if you put your money in cash, you're not going to make any money, but you're not going to lose any money. And that's as important than making money at this particular point. Put 25% of your money into hard assets. Gold, silver, and diamonds will deal with inflation. So as inflation goes higher, you will make money on those assets, and they will offset the higher cost of inflation. The other thing is that there's certain markets that we've recommended to you that you will be very profitable on. Diamonds are one, and gold and silver. I believe our clients not only have made fortunes in the market, but will continue to do so. Again, I'm urging you to read the newsletter this week. Randy did a phenomenal job again. There's so much news coming out. He sifts through all this stuff that means nothing, that is all just grandstanding and cheerleading, and gives you the information you need to make an intelligent business decision. We want you to be smart about what's going on, not emotional about what's going on, and we want you to be in the assets that are going to protect you against what's coming.